further delay, let's begin today's event, again sponsored by Technisys and hosted by American Banker. I'd like to introduce your moderator for today, and that is Mike Perkowski. Mike, you have the floor.
Well, hello, everyone. Welcome to today's web seminar. As you heard, my name is Mike Perkowski. I'm pleased to be the moderator for today's program, Challenger Bank Redefines Payday in Digital Banking. Before we go any further, I do want to take a moment to again acknowledge and thank Technisys for sponsoring today's program. We really appreciate their support. To help us get through the issues today and to answer some important questions from our audience and things that are probably on your mind, we're fortunate to have two expert speakers who are going to cover the ground today, both as presenters and as expert commentators. We're going to hear from Stewart Stockdale, Chairman and CEO of Rellevate. Stewart is responsible for the company's vision, strategic planning, business growth, and overall fiscal management. Stewart brings broad experience with world-class companies in the payments, financial services, and consumer product sectors. He was named one of the top CEOs of tomorrow by Bloomberg Businessweek, and most recently served as CEO of J.G. Wentworth Company, a diversified consumer financial services company specializing in mortgages, structured settlements, payment systems, and personal loan options. Previously, he was president of the Western Union Company, where he ran Western Union's money transfer and consumer payments businesses across 5 global regions. Stewart's going to be joined by Herbert de Ruijter, head of Cyberbank Digital North America at Technisys. He leads the business and product expansion efforts of the company's next-gen digital banking platform. In this role, he developed the market strategy, created an ecosystem of technology partners, and defined the product strategy for next-gen banking technology. Over the past decade, Herbert has built high-performance product and business development teams globally. He has provided advisory services to major financial institutions in Asia, EMEA, Europe, and North America regarding their digital strategies. We're very fortunate to have both Stewart and Herbert with us today, so let's get started. I'm going to turn the program over to our first presenter, and that is Stewart Stockdale. Stewart, you have the floor.
Thank you very much, and thanks for having me and Rellevate. Rellevate is a 3-year project. It's something that I've been passionate about in building. You mentioned a little bit of my background. I've been working for large, big global companies. I also worked at MasterCard and other places. And in my opinion, what we're building is really what middle America needs the most from a cash and cash flow. So we are a consumer financial payment services company. Most of our products, not only, but are distributed to employees through the employers as a benefit, but consumers could come directly to us, straight to us through our consumer applications. As I said, we've been building Rellevate for the better part of 2.5 to 3 years. We went live last year. We've gotten great receptivity from the media, Forbes, American Banker, and a lot of the digital technology media. Our technology stack is Visa DPS. We're fortunate to work with Technisys. We work with Cartronics, Payveris, and a number of leading edge technology and payments companies. And we're now really fortunate to be working with some great brands. We're working with Dunkin', we're working with a city here in Connecticut where we're based, Crocs, Cartronics themselves, Autumn as customers of ours, and obviously their employees will ultimately become our customers. And we also have a great management team. We have a great advisory group. Bill Rogers is one of them. He's a former economist under the Obama administration, and he's the chief economist of Rutgers University. And he's passionate about what we're doing and how we're helping consumers across America. So what do? We give people access, movement, and use of their money anytime. It's a pretty bold proposition. So if you think of it not just from a technology perspective, but also from a regulatory compliance, is a complex build. What we aim to do is give people maximum control over their finance. In my opinion, this population, that people that make $25,000 to $100,000, it's about cash and cash flow. And it's banking for today, and take into consideration that most of Americans, almost 80% of Americans, live paycheck to paycheck. So it really is about I needing their money and needing it now. So the products that we've built, this is our full product stack, is a digital account. So think of a digital bank account with earnings, credit, interest. We give 38 basis points of interest, and I urge you to go track what some of the big banks give as far as interest, and it's many of them don't give 38. And last I checked, my big bank gives 1 basis point of interest. Go figure. FDIC insured, $250,000 per account. It comes with a Visa debit card, and you can obviously do direct deposit into the banking account. We offer a product called Pay Any Day, and it's about cash and cash access, and I'll describe that on the next slide, so I won't dive into it. We offer 2 types of bill pay, ACH, which is 2-day, and immediate. One of the best products that I had while working at Western Union was a product by the name of SpeedPay, which allowed people to pay their bills real time. So if a collector comes and say you need to pay your bill now, the traditional 2-day ACH won't get there in time. So we offer an immediate bill pay solution. Same thing with money send. You could send within the U.S. and you could do the 2-day ACH and an immediate offering as well. We're connected to the Visa network worldwide. Allpoint is our preferred network, and they're a great partner of ours as well. Obviously, their parent being Cardtronics. Obviously, people can move money to another bank account. It's 24/7. It's all digital. It's all phone-based and computer-based or PC-based. 24/7 customer service, English and Spanish, and you could call us anytime. I find a lot of the new fintechs don't really want you to call them, and we're dead against that. We do want people to call us. It's all about customer service. Here, let me get the button over here. What is Pay Any Day? The pay is the ability to get people to get paid the day they work. So if you work today, that money is legally yours. We advance 50% of your earned wage that same day. So you press the button. So say you work 10 hours today and you make $10 an hour, that's $100. $50 of that is made available to you today. You press the button, it goes directly into your Rellevate bank account. So it's a cool system. We charge $2.95 per advance. So similar to what an ATM transaction is to really get your money, and we call that a transaction fee. There's no limits. You could do that as many times between the pay periods as you want. We get our money back when the employee gets paid back into their Rellevate account, and we take back the advance that we had given during the 2-week pay period. So it's really about, smoothing out that 2-week pay period. There's no credit checks. It's not a loan. There's no interest charge. It's an advance on your earnings, and we take all the risk on that. And part of our messaging is life happens. People plan. But most of Americans, or 40% of Americans, can't afford a unforeseen expenditure of $400. You heard that through the political process. Clearly through the COVID process has made it even worse. So when things do happen and you need, many of you may have different buckets of cash. You may have a savings account. You may have a credit card. You may have, friends and family. But a lot of people don't. And so, not only do we offer a great banking solution and digital banking solution, but the ability to monetize your payroll on a daily basis is part of our core offering. And obviously, we're working now with some tremendous employers and rolling it out. So we've been very blessed and successful so far. So that's a little bit of what Rellevate does. We have a fantastic team. Most of our people have worked for large Fortune 500 type companies. I say we're a little fintech with a Fortune 500 type management team, a great group of investors and great group of advisors. With that, I'll pass it back. But thank you for having us.
Stewart, thanks a lot. Before we turn it over to Herbert, I'd like to ask a couple of real quick questions. Let's start big picture. Can you describe your journey to build a digital banking infrastructure?
I've worked for many years in big companies, and when I left JG and I had a period of non-compete, a group of us, my co-founders and I, sat together and said, we were to build the perfect company for that mass market. Everybody talks about the underserved and financial inclusion, and I think a lot of it is lip service. I think a lot of the channels that lower income people have to go to really onerous. Payday lenders, check cashers, so forth. And I've known them. A lot of them have been partners of mine over the years. And so we said, let's build a cash-based, real-time, in that sense, no risk product that really allows mass market to get engaged and really utilize and solve their problems instead of just talking about it. And so we set out to build. And if you could think about it, regulatory compliance and the products that we're offering, which is, I think, as complex as most major banks do, the first part, we went out and started looking for best-in-class partners, people that were excited about what we were doing. The first one that we announced was Visa and Visa DPS, and we've worked with Visa in the past, and I think they loved our project, and we love working with them. So they jumped in, and obviously that was great. Then after that announcement, I had known Technisys from a previous world, and they weren't even in the U.S. at the time. And I spoke to them about their plans of coming into the U.S. and I believe we were their first customer into the U.S. And they've been a great partner because it was all about what do we want to build and make sure that they were supportive of what we wanted to build, because it was a complex offering. And like that, the rest of our technology stack came about. And then having been in the business, we recruited some of the best people that really loved it. Before you know it, we raised money and we're off to the races. So it was a process and quite a time, both financial as well as time, because building what we needed to build and making sure you have all of the approvals and partners and so forth takes time, but well worth the effort.
So Herbert, I know we're going to hear from you momentarily, but before we do, could you just tell us a little bit more how you see next-gen digital banking evolving today?
Sure. Let me walk you through a couple of highlights here. Traditionally, as Stewart mentioned, if you want to build a bank, you start to build up both your technology and your product stack on the product you offered. In the past, we bought applications from various vendors, and that built up that stack. What you see evolving today is that you can pretty much consume them as a service, also called bank as a service. The only thing that's still, I think, I consider a limitation there, it's still the traditional stack based around deposit and lending products and all utilitarian things you need to have in place until the rails that you're having. So we anticipate that tomorrow's infrastructure will be more, I would say, three-dimensional. One thing is the services that a bank will buy or consume from a BaaS or technology provider will be more fine-grained. And secondly, they will have the options for the bank to tailor those products more easier, more fine-grained, build new compositions, build truly new and distinct kind of products. And where that's coming from is that what we see in the market, similar to Rellevate, where we see banks or want to address very, very specific consumer needs. And it's not only about underserved, for example, geographies or demographics or so on, but something like where you still have to kind of go into a disjointed, I would say, journey to consume services. Well, if you look to the true buying journey or the commerce supply chain that you tie into, it should be way more embedded and therefore, like I said, more ingrained into that part. And if I talk about that part, is what we're seeing is that banking becomes less a Swiss Army knife, and where you have a single tool to cover everything. And this is, for example, also one of those nice examples here, and we see them popping up almost every day, isn't it? And this is Ensemble, and the only thing they try to fix is the problem that more than 50 million parents have in the US, how to deal after a breakup, or let's say after they have divorced, and take care on the combined costs, expenses, and for example, tuition for the kids and so on. So financial products become more, I would say, fine-grained, more tailored, and more fit for purpose. At the same time, we see also that with those fit-for-purpose applications, that we almost end up, I'm not sure how it works for you or so, but I'm almost ending up with 12 apps for a specific need on my mobile phone. And that's, for one part, nice. On the other part, they're quite disjointed. So what you as a kind of a next evolution, I would say, on the customer experience seeing is, one thing is that the balance between, or the conjunction between banking and commerce will be rewired, where I think the commerce aspect becomes more predominant. And so these are not two disjointed, I would say, experiences for clients and to take care of their banking needs first, while in the end they want to buy, purchase, or finance something. And what you also see is that the rise of what we call the super app, in this example, and this is what PayPal also recently announced 2 weeks ago, what they call the super app, where you see more connected ecosystems in a single app, where you can streamline as a user and control both the data and the information between those apps while you're doing, for example, shopping or doing the act for paying things. So technology will be more geared towards not the definition of products or the way how you expose themselves, but how you distribute them into a low-cost infrastructure. And so we see a rise of single financial products, more deeper embedded into the customer journey and in a more natural place where people, when they need, what you call this at the point of need or the point of interaction happens, that the consumption will happen. So the bank becomes slightly less visible into the entire journey. So to wrap things up, we see a world how digital banking technology or infrastructure will evolve, where banks are able to control the entire life cycle of their mostly tailored products, when they got the tools to assemble those and have the mechanisms to distribute those products at various points of interaction, or where they want to partner with others to let their products being consumed. And that can be a Shopify marketplace where, for example, a BNPL product that the bank provides got injected into the merchants kind of checkout process. There's a ton of variations there. But I think that digital banking becomes a more integrated, lifecycle-driven flow that starts with the ability to manufacture customized products, and also the ability to quickly and easily distribute them at the variant point of needs in their own ecosystem or in others.
Great, thanks, Robert. Let me ask you a question before we go on. When we think about, look out a little bit, let's say 5 years, what do you think every startup bank is going to need in terms of digital banking infrastructure 5 years from now?
I think this is a good example, which I almost use. I think on a certain point, we see a rise that non-financial brands will become predominantly the point of sale or the point of interaction in the journey of commerce. I think in 5 years from now, we will see platforms on the horizon that makes it almost as easy as opening up a new shop in Shopify to open up your new bank or to exploit financial products into the value chain that they support. The various choices that will arise will change dramatically here too. So the choices that you're making is more about how financial services are being delivered, how they are bundled or unbundled in this case, and for example, how payments will operate to solve specific problems online, in-store, offline, and so on. Sorry, I was a bit off.
Okay,
does it answer your question?
Yes. So, Stewart, let's just come back to you for a quick question. So we think about when you got started, when you began the Rellevate, can you tell us a little bit about the vision that you had back then compared to where it is today? Okay, is what you deploy today exactly what you thought, different from what you thought? If so, how is it evolved from your original vision?
Yeah, I mean, that was a big discussion item even from the very start. Do we do one product or two products first and then evolve from there? And we decided, even though it would take longer and more money to build the majority of the product set from the get-go. So the only thing that we do not have built that is part of the core that will come in probably in the third quarter of this year is cross-border money transfer, because I think a lot of people that we deal, are going to be, regular consumers, but a lot of them are going to be immigrants and migrants that do want to send money back home to Mexico, Central South America, Asia, and so forth. So that would be the only thing that was missing from the original process. And we knew that it was going to be a lot of build and but I think that also made it a competitive advantage once we had it, because we really don't believe that anybody has the capability that we have today for our particular target market, which is obviously a very large one within the United States. But then, of course, it becomes what's next and how do you stay ahead of the game and the competition and so forth. But I would say that about 90% of what we set up to build, and I think that's really, really important when picking providers and partners and so forth, is a clear vision of what you want to get built. Because a lot of these projects tend to get started and then people lose their way. And before you know it, you built something completely different. And sometimes it's obviously okay to change course and course correct. Where we did change some things was on pricing and that type of thing, because we were building, and then we went out and talked to employers and talked to consumers, and we got a lot of feedback from the consumers. So I think some of the product attributes changed, but the original build was, I would say, 90%, and it's only because we haven't got to that last piece, as I said, in the third quarter.
Great, thank you, Stewart. So, Herbert, let's go back to you for the next part of your presentation.
Thank you. So, one of the things that I get asked many times, how do you start? Isn't it when you build a bank? And not only just looking to the technology stack, that's just there, So how do you build up what I called your product stack? We see various examples. And one of the things what we see today is, this is, for example, how the first-gen challengers, in this case in the UK, Monzo and Starling Bank, built up the stacks. What you see clearly there, they built the basics in place first, card deposit, and maybe here and there some loan products, trying to kind of build a business on top of the interchange fees that they kind of occur, and start to partner with others to bring specific products that address a specific unserved need. Not, like I said, an unserved market, just an unserved need, like Rellevate did with their launch of their products. That's typically what we see. More and more banks that we help at this moment to launch always have one of those kind of killer kind of features that are not available for an underserved market. We also, on the other side, to talk to another extreme, to Walmart, this is pretty much the landscape of what we call money center at Walmart. And the first glimpse you're thinking like, that's a total mess, so many partners, so many products and so on. But one thing that, for example, Walmart did very well is they pretty much, I would say, redefined the concept of open banking in their segment, or open finance, as we see evolving in the US. So they are addressing the needs of what I call an underserved and unprofitable segment for traditional banking. Although the bank's impact, or the impact for the banks of what they offer, is minimal in terms of segment profitability, for example, but they are very well placed to change the behaviors or address those various needs at Walmart. So if you go deeper in this document, if you want to break it down and look at each financial product, what they've done very well is each product pretty much in this picture pretty much is an answer to a need that their clientele had. What we see more and more evolving is that what we call them customer journeys or needs become more embedded. They become more fit for purpose. And there's a couple of examples you have here. For example, gig workers, for example, a typical Lyft driver that got the proceedings of his rides straight in his deposit account. So Lyft made sure that each of his drivers have their own deposit account, and they're able, based on the data that Lyft has, to kind of deposit those amounts after his ride is being finished. The other side, we see, of course, the rise of what we call BNPL, buy now, pay later, kind of products, which potentially or have the potential, looking for the reason why we use those products, has the potential in 10 years to maybe replace the credit card as we know, pretty much financing, commerce, or my specific needs. So more and more, we see those kind of distinct and unique problems being on the horizon now. The interesting part is, with the low cost distribution for the various digital channels, which is mostly the app we're using, is that these are becoming what we call no barrier engagements. And so it just only takes 2 minutes to install an app, do some instant verifications, fully digitized, and you're good to go to consume that product or to cover the needs that you have. So we anticipate that banking products are more moving out of the banking system. Not that they don't exist anymore. And so we see, for example, that payments or certain forms of deposit, among others, are moving out of the banking system. And they're coming more closer to what we call to get embedded at the point of need. The same thing in addition, lending in any forms, mortgages, student loan, leveraged loans, consumer loans, moving same likewise out of the banking system and move towards the financial trends where the bank becomes a facilitator. We see that pure fintech, as we know it, which we always saw as a threat to the banks, is less of a, I would say, quote-unquote competitor than just the fragmentation and the integration of new consumer value propositions. And I think Rellevate is one of the best examples out here. And so the key becomes more the consumer value proposition than the product by itself. So we got accustomed to a world where a mobile phone is our way of integrating everything together. And we saw just a moment ago the super app, but everything is pretty much around the consumer's tasks. So if you want to pay your, for example, your babysitter, Venmo me. Refinance your student debt, go to SoFi, check out and get an instant loan for 4 payments, go to a firm or any other BNPL provider, or cash your COVID check, and snap a picture of it with PayPal and so on. So new experience are pretty much enabled by infinite, no-cost distribution with cross-channel and multi-partner integrations, as you see in this picture. One thing, and was the previous part was pretty much focused on consumer or B2C scenarios. Same thing we're seeing likewise into the B2B scenario, where we've seen Shopify providing financial services to their merchant, where they're able to give them a loan based on the insights that Shopify has in the revenue and the selling and buying behavior of those merchants while selling their goods through a Shopify store. Likewise, Stripe providing, for example, treasury service to for example, retailers in this case. And so they're injecting themselves more naturally into also the needs and the jobs to get done by those businesses that need to have some natural fitting support on the tasks they're doing already daily. So the trends that I just catch are not just limited to B2C or consumer scenarios and so on. And to just finish it up, So what's left then for the banks? What we see is the trends on the left-hand side to deliver financial services at the point of the customer need. And in contrast, having a better answer with the infrastructure and the regulatory frameworks in place to also, for the banks, having the room or taking the room to offer new financial capabilities or products, for example, to SaaS providers or to non-financial brands, but do it in such a way that they can do it better and faster than those businesses could have done alone. I'll leave it up for here.
Okay, great. Stewart, let's bring it back to you. So for Rellevate, how are you measuring the effectiveness of product performance?
Stewart, I think you're on mute.
I apologize. The key is adoption, right? You got to bring people on and get adoption and satisfaction, and we should see it by the usage levels of each of our products. How many people are we bringing on board? What percentage is active? What percentage is using bill pay? Which percentage is doing money send, real-time money send, delayed money send, pay any day? And so it's a suite of products that we're offering, and what we're really ultimately focused on is customer engagement and satisfaction. It's not about the individual products. I think that we're offering really good products, and we measure their usage, but ultimately it's an account that we measure and the satisfaction with the account. Ultimately, if you don't see any usage of some of the product set, then obviously if nobody's using one particular, then we'll evolve that or improve it or delete it. But it really is about offering a set of products that we think collectively make a killer application for our target demographic.
Great.
I'll add one thing. Since we're offering this as an employee benefit, what we're also now tracking is does this help the employer? Does it help them with attracting better employees, employee engagement, employee retention, satisfaction? Because if you have an employee that's constantly worried about cash and cash flow, could we alleviate that? And does that make them a better employer? Does it make them a competitive advantage from somebody across the street? We're dealing with a fast food company that it costs them a lot of money to onboard an employee. And to go across the street to the competing fast food for an extra buck, it's a big loss. So if our products really make a difference, then not only have we helped them, we're helping ourselves, and it really makes it for a win-win proposition with the employee, the employer, and obviously Rellevate. And if you look at our fee structure is very fee-friendly, employer-friendly. And what we're banking on is a lot of usage, not these high fees that some banks charge and then some onerous channels charge.
Great. Thank you, Stewart. Herbert, before we go on with the rest of your presentation, another quick question. On your previous slide, you talked about some industry trends. So what are some of the trends you're seeing in the way financial institutions will manufacture and distribute their financial products in the future?
Thanks, Mike. Yes. I think the two keywords here are manufacture and distribute. That traditionally, and I think still today, banks are still defaulting to a set of defined products, relatively static products around deposits and loans, and let's say almost like a single way how they distribute it. That model pretty much hasn't changed, isn't it? These are still what I call flows or journeys that are decoupled from the true commerce patterns and behaviors we see on the consuming side. So the main change is that where you see success coming in from companies like Rellevate and the more successful kind of fintechs is that they first of all look deeper and I think better to the problem, leverage, let's say, a low-cost infrastructure, how to distribute their products digitally, direct or indirect through partners. And secondly, what we're seeing now at the moment is looking to And where banks are struggling is they're having also the legacy infrastructure that allows them to change or modify or build new of those products. So we see pretty much a big wave of technologies. We provide at Technisys where they can kind of augment or build a kind of an overlay on their legacy and static infrastructure and allow to build configurable financial products that are nothing more than variations of existing products, but using different data sets, which we never tapped into. And so that's mostly where I think I see the change happening in the way how financial products are being manufactured and distributed in the future.
Great. Why don't you take us through your remaining slides before we get into the audience Q&A?
Perfectly. So one of the questions I saw coming up was, what would you do if you would launch a bank tomorrow? So a couple of things. I think what we see common, and I'm just talking based on my conversations in the last years with startup initiatives, challenger neobanks and offsprings of existing digital banks, is what they're all looking for is to find one or two radically new consumer value propositions. Just a specific need that's there, solves it just better, and a more fit for purpose kind of way. That's one thing. I think you need to have that today in a market that's quite crowded of providers or emerging providers providing financial services to their clients. The experiences should be taking in account that there's almost like an infinite no-cost distribution in place. So when you define your product, distribution is one of the first things you're going to look like, because there are so many options that we have available now. Are you building your own proprietary digital channel where you provide self-service capabilities to your clients? Or do you just embed yourself more naturally into someone else's customer journey, which we also called embedded finance? Or do we build products with other partners and let them handle the distribution, or we as a bank do the distribution for them? Another thing is, which is the interesting one, is looking to the recent announcements. I think that's also partly due to COVID, is that banks are piling up in deposits, pretty much it's stacking up at that moment. So I think it's also getting time now, being in a situation where we're seeing today, I would say, the lowest loan to deposit ratios in almost like 36 years. And those low-cost funds should be deployed differently and, for example, fuel those new consumer value propositions moving forward. I think these are the three things that would be at least on my list if I would start or have to digitize my bank for tomorrow. Couple of things to wrap it up on my side in terms of slides. What we see is that tomorrow's bank is what we call is a customizable bank, and not customizable in terms of code or engineering, but something like a bank that's able to create as many customizable, fit for purpose kind of products and make sure that those products are connected. And back to my distribution claim that I just made. We see most of the digitization initiatives still on the left-hand side, something like we have a legacy infrastructure and we want to make at least the interaction points with our clients a bit more sophisticated, modern, and different words we can use for that part. We think that digital banking platforms today and tomorrow will do more for that part. They will compensate for the staticness and the limitations of a legacy, for example, core or payment infrastructure, and put some layers on top of that, which we call product factories, that enable the bank with low-code tools to provide, to provision, and distribute as many products as they want to, assuming they're profitable, of course, to the various points of need. That might be their online channels, their branches, but also to, for example, marketplaces or injecting their products into a non-financial brand's financial product process, or what we called the point of need or the point of sale. And the platform, for the same way, back to also to what we saw with Stewart's question about how do you measure success. You see also product analytics coming in that will measure the effectiveness of a portfolio of product that a bank has that has been tailored to the needs of those various points of interactions, and start doing things like A/B testing. If it's so easy to reconfigure or tweak the parameters of the products you bring out, it makes it also way more easier to test which variation of my products is best or serves the needs of my clients the best way possible. I'll leave it with that, Mike.
Okay, so let's take some questions from the audience. And just a reminder to our audience that if you would like to still submit questions, you can do so. Our speakers will get to as many questions as time allows us. So, Stewart, let's get started with you on this first question here. What do you think the key pitfalls are to look out for when building a bank from scratch, something you have firsthand knowledge of?
I think people tend to go to the technology first and get hung up on it being digital or not. And I don't think that that's the way to look at it. I think you got to look at what do you want to build, make sure that you have real clarity on what you want to build, and then how do you go about building that. There is no one single solution out there to build what you need to build. Okay, so you have to be savvy enough that say, okay, I want a digital banking platform. I want a Visa MasterCard connection. I want a bill pay solution. I want whatever it is, the products and features that's going to integrate. I think through APIs and the technology makes it a lot easier these days to do that, but it's still a complex roadmap. Because it's not just about the technology. You have to make sure that you have your regulatory and compliance side completely figured out, your security, and that's a big issue. Cyber is great, but there's also a lot of pitfalls there. So you have to make sure that you really know what you want to build, and then once you have that you're really clear with whoever's going to help you build it, that you've got the right budget and the right time frames. And usually those aren't really clear when people start. And I've been around technology long enough that I know that those are usually opposing forces. So you have to make sure you get clarity on both of those fronts before you start. So getting the right roadmap is half the battle, in my opinion.
Great, thank you, Stewart. Herbert, let's come back to you for this next question. And this is a very good one, and I'm going to want Stewart to answer as well. Our audience member wants to know, are traditional banks dead for the 80% of users with low deposits and no loans?
No, I don't think so. I think the role of the bank will change in the ecosystem. So banks traditionally, or financial products, are meant to drive commerce. I think commerce is starting to drive more how bank products are being consumed. And I would say way more seamless. So banks will probably become facilitators of those value chains or supply chains that the non-financial brands kind of need. I think non-financial brands will be the biggest consumers or touch points for financial products in just general. And the banks will find incremental and new markets, because embedding their products into non-financial brands, channels, and interaction points is a tremendous big market that's really untapped yet. So I think the revenue streams will change. But just in general, I think there's so much coming our way still where the banks have to adapt. And with the rise or the introduction of FedNow, interchange fees will be more than, I would say, more than half than what we used to be. So I think banks are already exploring their options, finding new streams or different streams of income based on the relatively complex needs of a highly regulatory framework where they're still a step ahead. Second thing, as I mentioned this before, banks have to step up the game, of course, to be ahead in terms of innovation, product innovation mostly, to support those businesses or partners that are changing the way how they interact with their clients. So I don't think that banks are that just in general. I think it's a rewiring of typically two distinct networks, a network of commerce and a network of finance that got pretty much stitched together in the future, and that forces everyone to play their game differently.
Great, thank you. Stewart, your thoughts on that?
You have to define what is a bank, right, before you answer that question. And of course, there's the investment bank and the institutional bank and the wholesale bank and the mortgage bank, and so there's a lot of elements to your question. I think your question was more focused on what happens with a consumer bank, which is more the topic of today's discussion. And I think banks have obviously very large deposit bases that have historically been acquired. If you look at some of the big banks that really grew, they acquired those deposit and those accounts by acquiring different banks around the country. With the emergence of challenger banks, digital banks, and so forth, it's going to put more pressure on the consumer bank. But if the banks are smart, they'll eventually acquire some of these players, right? That's what, if you think of the technology side of payments, you have some very, very large players that have made a living by acquiring the mid-sized players. And then you have many, many small players that hopefully get into that middle tier. So I think that the acquisition game, it will play into how banks play into long term. But clearly, I don't think that that's where the innovation is happening today, the way it did many, many years ago when the ATM got started and the credit cards and all that sort of stuff, which really were bank products. I think a lot of that innovation is coming from elsewhere.
Great. So let's come back to you for the next question. How long does it take to launch a bank backed by a sponsor bank once you have a roadmap ready?
It's for us, it took over 2 years, and it's maybe 18 months before we really got started. But, definitely 18 months would be, depending on what you're going to put onto it. If you wanted just to do a prepaid product the way Herbert, described some of those English banks that started more with a prepaid product, you probably get it up and running under 12 months. But if you really want to offer digital banking service across the board, I would venture to say it's going to be 18 months to start it from scratch, because you need a lot of different pieces in play. You need the partner bank, you need the who's going to do your processing, unless you're going to do it yourself, and then all the different partners and the integration of all of that. So rough estimate about 18 months is my opinion.
Great. Herbert, let's come to you for this one. Next audience member wants to know, we are just getting started in evaluating digital banking platforms, and we have specific requirements, but we're also learning as we go. What should we be looking for when researching technology vendors?
Good question. What we see is, first of all, it's good to go live as soon as possible, because the real learning starts to come in, and while you're capturing data, while you're observing behavior of your clients and so on. So going live is always a quick thing. So one thing to look at is most of the startup banks that we have, outside, let's say, the one or two unique products they want to launch with, everything else is table stakes. So you should at least expect from your bank infrastructure provider that all the basics, ranging from ACH, bill pay, the very things that make a bank basically a bank, should be instantly there. Make sure that you don't have to shop around for all these kind of best of breed solutions, a payment provider or a KYC solution. Expect your vendor to pre-bundle those things for you. That takes a lot of, I say, complexity away. Second part is looking where the market is going to. Provide a vendor that not only provides you a fancy UI to serve your clients, but has the capability that you can play in someone else's ecosystem, as mentioned by Stewart, APIs or the API economy. Make sure they also have an eye on what the movements are, particularly in the US, around open finance, which is evolving, not there yet, but pretty much shaping up how ecosystems will be standardized and how the market will kind of leverage those kind of things. And the first thing, of course, is look to the capabilities that a platform provider gives you to insert or inject your financial product, that you can operate both as a bank or a digital bank, both potentially as a financial products provider like Basis do to others in a kind of a wholesale model, if that's your preference, or be able to plug in your unique, distinctive consumer needs like products into another ecosystem. That can be the shopping cart of a retailer, or it can be the point of sale, for example, at the Best Buy, where you want to provide a BNPL-like product for people who want to buy the big TV for watching sports next day, but don't have instantly the money available and don't want to go through the loan process. So distribution enablement is quite important here.
Great, thanks. Stewart, let's come back to you. Next question, our audience member wants to know, and apologies if some of this is a little sensitive, internal, but they'd like to know. What can tell us about your customer adoption, usage, and retention rates?
Yeah, well, obviously we don't disclose all of our. Fortunately, I've been in a public company most of my life, and I had to disclose everything. The beautiful thing about being private is that we don't disclose a lot of that type of stuff. But what we think, something that we really focus on right now is the adoption rate from each employer, right? So if you look at an employer, what percentage of the employees sign up to us, and then we get down to those product features. And those vary across the board. Some employers, as much as we'd like to think that everything's, digital, when we show up at a company, we get a much higher adoption rate than when we just send an email across all of the employee base. So, digital is fantastic. And obviously, there's some value propositions where remote is 100%. In our business, because we're dealing with employees, it's still really important. Not that we have to be there all the time at all, but to go in and explain the product and explain the features are valuable. We do it both ways. We onboard electronically and we do it in person. We have teams that go to each corporation, similar to that when you sign up for a health insurance or other financial or other benefits from employers. But the adoption rate's been really good. Our adoption rate for Pay Any Day has been incredible. There is a tremendous need for people getting access to their funds every day. But amazingly enough, it's not always our primary feature. People still use a tremendous adoption rate for ATM usage, for bill pay usage, for obviously they use their Rellevate Visa card all the time. And so the adoption rate by the employees has been really encouraging when we go to corporations. And I'll give you an example. One of them where we went in and we went into an employee base where 50% of the employee base signed up, which is great, right? People say, well, you're going to get 3 or 4%, and by most standards that may be good. But over 50% within that one employer was phenomenal, and obviously we're rolling out to more of their locations. But so far we've been really happy with the adoption rate. But that doesn't mean that all of them have that same success rate. There are different employer types and different demographic types, and so we're measuring which are the best for our product.
Well, great. So that does conclude the part of our program with our Q&A. We do want to thank our presenters, Stewart Stockdale and Herbert de Ruijter, for spending time with their presentations and sharing their insights and answering questions. For those of you who we were not able to answer your question, someone from Technisys will get back to you as soon as possible. For those who would like some more information, There is another asset, 3 Steps to Digital Transformation. Be sure to check that out. And we want to thank all of you who attended this program today. We're glad you could take time out of your busy day to learn more. And we hope that you'll join us for a future web seminar brought to you by American Banker and its partners. So on behalf of your presenters, your hosts, and your sponsor, thank you for joining us, ladies and gentlemen. Have a good and safe day.